Hello, everybody. I hope you guys are doing well today on this beautiful slash very rainy Knoxville day. Um, really excited to be here with you guys. My name's Troy McNeil. For those of you who don't know, I'm one of the co-founders of Option Omega, a backtesting tool. And today we have a very special guest. If you have ever been around options for any length of time ever, you are familiar with this person. He is what I consider the godfather of options. I consider him kind of my options mentor, and a very, very special guest today. Please welcome Dan Sheridan from Sheridan Risk Management. Dan, how are you doing?
Thanks, Troy. I appreciate the great intro. It's like when anybody says, if you've been around a while, so the first, Troy said in a very gracious way, he's old. And, it made me think of like Marlon Brando in The Godfather, this old, especially when the word Godfather, my mind always goes to Marlon Brando with The Godfather. So I'm an old mafia don, right?
Yes, I love it. I love it. Well, before we get started, on behalf of Dan and I, options involve risks. They're not suitable for all investors. Everything we are talking about today is backward looking and not forward looking. As always, consult your financial advisor. Everything talked about today is simply for, if I'm saying it for entertainment purposes, and if Dan's saying it for educational purposes. So, with that being said, what I thought I'd do is, Dan, we have looked at tests before and we've talked through kind of your story as a market maker. But do you
Yeah.
care just to give the 2-minute version of who you are and where you've been the last 30 years?
Wow. 2 minutes for an Irish
Two,
for an
yeah,
Irishman to tell where he's been in 2 minutes is pretty scary. Yeah, I grew up in Chicago, uh, lived in the city because my dad was a policeman. Mother was an emergency room nurse. A good Irish men in Chicago. Those are jobs. A lot of policemen, a lot of firemen type thing. I see I got a little. Am I still going? Because it looks like I froze. Troy, do you see or do you see in me?
I see you, Dan.
Okay, good.
Yeah.
And I went to I think DePaul University downtown, which is a couple blocks from the exchanges. I took an options class when I was at DePaul and kind of got hooked on the whole thing, and uh, got a job as a runner in I think 1982, and basically was down there till 2004. Worked most of the time with John and Pete Nigerian, who are on CNBC Fast Money. We were a specialist in the pits, a little bit different, kind of a market maker with more responsibility. So that's where I did a lot of risk management for the firm as well as trading. And then in 2004, went off and as the business was changing back then, I think our firm Mercury Trading was, I think, John Nigerian, they sold it to Citadel. So because that's when you had a lot of exodus of traders from the pits because it became more electronic. And so a lot of making the money as a market maker back in the day was the spread, right? You could buy it at $2, you buy it wholesale, sell it, buy it at $2, sell it at $2.30. Well, as you got more exchanges involved and more electronic, the bid went from $2 bid to ask at 2.01 or 2.02. So, the edge for being a market maker in the pit and taking the risk kind of went away in firms like Citadel, who, could trade for a half a penny or would maybe hedge things all over with different products, kind of filled that void. But since then, I've been the last 20 years have been just mentoring retail traders in options, and mainly the focus is the craft. Troy, as we've talked about before, you can teach the cooks at Chipotle to put an option trade on in an hour, but in terms of risk management, it's a craft that takes time. And so I've enjoyed teaching and working with many retail traders over the last 20 years, and it's exciting to be here with you. In the, you have a big community with 0-day type trades, and I think that's been a big help. That's been great, bringing folk into the options world via 0-day trading. And I think just the the thing they need, in my opinion, more than anything in any trade is risk management, because that's the only thing. Good risk management is the only thing going to keep you in the business for 10 years. It doesn't matter whether you do an iron condor, a butterfly, whatever version. That's inconsequential to me. It's what do you do once the trade's on and have some kind of semblance of sanity and how you're going to manage the position. So I don't know if I went 2 minutes, Troy. Things I probably left out, or
2 minutes and 20 seconds, but that's no worries. No worries at all.
That's good. So that's about it, at least most of it. Yeah.
No, that's perfect. No, you said it at the end there. We have a lot of 0-day traders in our community, and the thing I've always appreciated about you is you have one kind of goal in mind, which is risk management. Obviously, if you take care of risk management, you're going to do okay in this business in the long run. But especially with 0-day, it lends itself, I think, to not necessarily gamblers, because I think I know a lot of smart 0-day traders, like who manage their risk well, and things like that. So it's not necessarily a lotto ticket, but I do think that because it's so popular now, people get into it without necessarily learning those craftsmanship skills. And so what I wanted to do today, if it's okay with you, is I have kind of a couple tests, and one test in particular I want to look at. And for those who, I get a chance to talk to Dan a lot, and I bother him a lot with questions and things like that. And one of the things that I love doing is showing him a test in Option Omega that I like a lot. And inevitably, he just makes it better without really ever thinking twice about it. He just kind of improves on stuff. And so what I want to do, if it's okay with you, Dan, is I'm going to share my screen.
Yeah.
And I want to look at a couple tests. And I want to just get you, and I'm going to just run it for you. We'll rerun it a couple different times. But I want you to kind of show me how you iterate and how you think through putting on trades, and how you think of risk management and things like that, if it's okay. And what we'll do, Matt is in the chat. Everybody say hi to Matt in the chat. And if you have any questions, feel free to just post them in the chat, and I'll ask Dan for you. But otherwise we'll go from here and just kind of watch. Honestly, Dan doesn't like it when I blow smoke. I don't consider it blowing smoke. I consider it whatever the opposite of blowing smoke is. He's real good at what we're about to do. So anyway, I'm going to show you one, and I made this really easy. Dan, can you see this?
Yeah, I can see it.
Okay. So I started with a real basic 0-day trade. Most people, I feel like when they get into 0-day trades, they get into it with the idea of the condor. I think would you agree with that, Dan, that most people kind of the entryway to options income selling is condors in general?
You're talking 0-day or in general?
Yeah. Well, in general, I bet it's a little bit more butterflies, but 0-day.
Well, I think in the world of, the bridge from, usually, at least my observation, the bridges come from, you're an investor, you're buying stocks, and then you read an article about what's a way I can get, make a little bit more money on my long stock, and they kind of make the bridge from investing into options through the covered right. I'm going to sell an out of the money call. That's what I've noticed, a lot of them. But I think that's changing now, because I think with the 0-day, that type of thing, this is becoming a segue into options 0-day, because it's very appealing. Because you don't have the overnight risk. It has other obstacles, right, that covered right doesn't have. And it's always tickled me, Troy, when you talk about covered rights. You call an investment advisor or you talk to somebody at a brokerage firm, they'll say covered rights are an extremely conservative strategy, right? But if you ask them on the other breath, you say, what do you think of short puts? They'll say, oh, no way. And if you try to tell them, well, they're both the same thing, right?
Yeah.
But it's just funny how in covered rights are very conservative
Oh yeah.
strategy. Now,
Oh yeah.
the only thing I'll say conservative is you can argue because you don't want to hurt the feelings of people who do covered rights because they consider themselves doing it conservative. And as long as the market goes up over time, which it has, and you have a long delta position, you do well, right? But if you look at some of 2022 and 2020, there was nothing conservative about it. But I think it's a very, it's part of the long portfolio. It's different. I mean, to me, I think folks should have, 20 to 40% of their available option dollars in trades like that. But it's a long term, right? It's a
Right.
long, I don't necessarily think it's the best thing in the world for someone 70 or 75 years old, right?
Sure.
Because I remember an 80-year-old guy told me one time, he goes, Dan, I don't have 5, 6 years necessarily if the market goes down for it to come back. But I mean, if
Right.
you're 20, 30, 40 years old, it makes sense.
Right. Yeah, that
Anyway,
makes total sense. So this trade, basically, you can look at the graph real quick. It's treading water. And all this is in my mind the most basic 0-day iron condor you could put on. And I'll go through it real quick with you, and feel free to ask him questions or anything like that, Dan. But it's SPX, and it's run year to date. So it's the 1st of January since to yesterday. And we're going to open the trade first thing in the morning, 9:32. And for those who don't know, option maker are new to it, the reason we do that is because liquidity is wonky those first 2 minutes. So you definitely can put trades on, but from a data standpoint, from us, we limit that just so we can get good data for you. So we place it at 9:32, and we do it every day. And we're going to use the exact strike offset. So only use it if there's only put the trade on if there is a trade, at the strikes we're wanting. And we're going to allocate 10% of the portfolio. So this is a $100,000 account allocating 10% of the portfolio. And then I've got some just basic stuff, some miscellaneous stuff. So we put opening and closing fees on there. Those are kind of tasty trade fees. And then entry and exit slippage of 5 cents. So we're assuming that you're gonna have slippage of 5 cents each way. The trade itself is you're simply selling a 25 delta put and buying 25 points below that, so a put spread, and you're selling the 25 delta call and buying 25 points above that, making the call spread, together making the condor. And as you can see, Dan, this thing just treads water. It's not no one's riding home with this year to date on anything like that. So I wanted to get your sense first off, when you're constructing a 0-day trade, do you even think about it in terms of delta? What is kind of the mindset you have going into a 0-day?
well, if I'm doing an iron condor, you mean, right?
Yeah, iron
I mean,
condors.
iron condors in general, just historically, I've picked the strike via the delta. And, I would say, historically, I would look at, maybe because we didn't have those 0-day and 1-day. I don't know when those maybe if someone could help me, when those originated, how long how long they've had 0-day. But, historically, might go 30 days out, 45 days out, 20 days out. And I mean, historically, I would pick them. I think I've changed a few things how I look at iron condors, but it would be more volatility based. I would want them in the high end of the range, volatility in the high end of the range. But let me just make a clear distinction. I would do iron condors when volatility, like if you want, people are used to maybe the term percentile. Troy, is that what people in your community
Sure.
would be? Let's
Sure.
say if you're like Tasty Trade or something, percentile. But to me, I would use those with a grain of salt. In other words, I don't want to sell. I want to sell high volatility when SPX has shown that it's stabilizing a bit, right? So if VIX goes to 70 or 60, I'd rather sell it at 40 when it looks like the ship isn't going to totally sink, right? So
Right.
like in the what do you call it? The COVID correction, which took place in 5 weeks, I think the VIX went up to 80. I
Yeah.
didn't even think about selling it at 80,
Right.
right? I mean, unless you were just selling puts and thinking, this thing's going to come back. But it was more once we started getting a little bit of two-way and it came back, and VIX was maybe at 60. Sell it, right? So I'm looking for high volatility, but a little stability, because I think people forget, Troy, high volatility means SPX is tanking. What the heck does that have to do with a range bound trade?
Right.
Right?
Right.
I mean, that'd be a good sell. Go door to door. SPX is tanking, do a range bound trade. Now, we like the concept of higher volatility. And what does that mean for an iron condor? Higher volatility means you get more room on your short strikes and you get maybe a little better credit, but it's more the room for a short strike. But I like to use the delta to pick the strike. Like you picked a 25 delta. I don't normally go that high, right?
Okay.
I would go a bit lower, but there's no right answer. It's just, when you go 25 delta call and put, you're basically creating a decent risk reward, right?
Right.
So I'll start with the premise. If I hit a t-shirt, you can't have your cake and eat it too. If I'm going to sell a 10 delta call and put, you could say that's an 80% probability iron condor. If I sell a 25 delta call and put, probabilities are like, flip a coin, right?
Yeah. Yeah.
I mean, it's like that. But you say, what do people love about a 25 delta call and put? Your risk to reward is pretty clean, right? Like,
Right.
I don't know what your credit is on these compared to the risk.
Well, let's look real quick. So you're putting this on, obviously different price points.
Yeah.
But your margin, I'm going to rerun it real quick just for the sake of margin and just do one. Just rerun it with one trade, contract per trade, just so we can get a sense of the margin. So, you're roughly $1,500 to $2,000 of margin per contract.
1,500 to 2,000, and what's the credit?
You're getting anywhere from, let's say, $5 to $8 on average. So it varies day to day.
So you'd bring in a credit of $500 to $800 for risk of.
Let's say be liberal. Let's say 1,500.
Okay, so maybe 2 to 1, right?
Yeah, almost roughly.
All right, but when you're talking about 25 delta in the 0 day, in a 0 day, right? This is a zero. The thing to keep in mind, when I look right now at a 25 delta, and again, I get it, we're about 2 hours before the end of the day, right?
Right.
But you got a 25 delta with VIX at 15. You're only, you're like 10 to 14 points away, right?
Right.
This is like the Grim Reaper is right on your, your doorstep. And I think but on the other hand, I think that's, with a 0 day, I think, I do look at things. To me, a 0 day iron condor is a totally different animal than a, if I'm doing a 15 to 45 day iron condor, it's a totally different ballgame, right?
Well, the beautiful thing about this is because we're just testing. I'd be interested because I started with the premise of condors, but what it sounds like to me is like maybe from your vantage point, a 12 to 15 VIX, you're not starting with that premise for a 0 day trade.
No, I don't mind. I mean, 15 VIX, as crazy as it sounds, 15 VIX is at the high end of the range.
Oh yeah,
for this year. I mean,
sure.
It's kind of scary because it's still a narrow range. But I don't. Now, what did with this 25 delta? What did your again, I'm not saying this is bad. I may tweak it based on as I hear more of what you did and what the results were in this.
Yeah,
might cause me to. Yeah.
This is a set it and forget it, and so we didn't do anything. So it'd be interesting to say, do you take a profit? First off, with the 25 Delta, would you like to move them down a little bit just to test a
Well, I
little
mean,
bit?
it's interesting. A 25 Delta, when you're talking about a 25 Delta uh, iron condor, you're almost closer to an iron butterfly than you are an iron condor, in my estimation.
Mm, yeah,
You know what I mean?
especially with
Because
the
then
orbit.
I
Yes.
mean, you think about if we did an iron butterfly right now, we'd sell the 5200 and maybe buy our wings, you know, X points away. And I think, to me right away, I would think I think of like an iron. I don't know what a lot of folk in your community do many more 0 day than I am, so I'd appreciate their feedback and yours. But to me, as you get further along in the day, I would narrow my widths, right?
Yeah. Yeah.
Because your risk goes up, right? I mean,
Yeah. Well,
as you go. So if I was doing a 30 wide, butterfly earlier in the day, as we get later in the day, I'd be narrower. And maybe even with the iron condor, I mean, I'd have to see, but at least my first reaction, I'd have to see with testing. Maybe I narrow it a little bit as we get later in the day. But this doesn't seem like a horrible delta. It's just that you may trade it. When are you getting out on this thing? I might get out earlier because, again, you're getting. I think you could get out of the trade quicker than you can in an iron condor. So my first thing would be, I wouldn't, at least without seeing the testing and stuff, but my impulse would be, this one, maybe I get out of in an hour, whereas a 10 Delta iron condor, you better pack a lunch, right?
That's right.
It may be a little more time. So I think I would like to see in this to see if you change the exit and get out earlier. How does that help things? That might be the first thing.
Yeah.
You're staying in this guy till the numbers get pretty low, right?
Yeah. Now I think so. Off the bat, so what I did is we're now getting out at 10:30. So we're putting it on at 9:32 and getting it out at 10:30.
Oh, okay, that's great. I'm sorry.
No, you're fine.
You're only in an hour.
I bet what we could do though at that point is you're going to get out either way. I'm looking through this. So Dan, as you go through, we have a trade log to show you what the actual strikes would be.
Yeah.
And when you got out and things like that. And we show you what your max profit was.
Yeah.
And it would be interesting. My initial thing looking at that is, well, let's say if we're going to get out after an hour either way, but a lot of these times, I'm looking at the losers. You might get 5%, 10%, So what I was thinking is maybe you do, you add a profit target of like 10%, right? And that might make it worse. It might make it better. Yeah. Much worse. Yeah. So the initial thought from that is, okay, well, we're getting out after an hour. Maybe I need time to let it run a little bit more than 10:30. So I'm gonna go back and run it without a timeout. And so that improves it. But what that shows me at this point is that I want to look at the losers. You only have two losers. So that's one of the interesting. You've run this, 69 times this year and you won 67% if you're getting out at 10%. But those losers, yeah. So if you change the profit target and you get out at 10%, you got, you're winning, but those two losers, you're just getting wiped out, right?
Well, what do you have for max? Can you put the most you want to lose is twice your 20%? I mean, if you're taking 10, can you?
Yeah, let's run it.
Yeah.
So it's interesting. It takes it down, but it's almost in my mind and it's getting to a little bit of what you're saying. The vol's just so, and this is run year to date. So the vol's just so low that it's almost like you're just not getting enough credit to withstand some of the whipsaw of it.
Yeah, and I mean, it's not that you can't. And here's the thing: a lot of people, if you ask iron condor 0-dayers, they'd say, "Well, I like higher VIX, right?" I
Yeah.
get more room, it feels better. But it doesn't, let me ask people in your community, take out, you know, maybe the last day or so, take out last Thursday where we went up 40 and then down 100. Take out a couple of those days. A lot of the last 2.5 weeks, even with a low volatility, it's been a 0-day trader's dream, right? Even
Yeah.
with iron condors and even with expected moves 20, 25 points. I mean, don't you agree? I mean, for people, I mean,
Oh yeah.
most of the last 2 weeks, throwing out Thursday, but I mean, again, those are, um, uh, so I don't, I've had a lot of, I've seen a lot of successful iron condors over the years when VIX is low. So I'm not, you know, I'm a proponent to do iron condors all the time, right? For the
Yeah.
most part. Now with 0-day, it's different. I mean, the only times I wouldn't play would be more, possibly. I mean, I want to play all the time, but I think, you might look at some news events or some gaps. But, you think about Troy and the SPX the last 3 weeks. How many days did we have where the range in SPX was like 20 to 25 points for the
Right.
day, which
Right.
is, again, you're not losing in 0-day stuff. So I think over the last 3 weeks, most of the ranges in SPX were under 30 points. Agree? So, I
Yeah.
mean, so,
Yeah.
so what's the conclusion? The conclusion is even if VIX is 13, 14, you're doing well, right?
Yeah. Yeah.
So it
No,
doesn't,
I think that's right. I mean, the other thing I was wondering from your vantage point with the 0-day is if you, you can't necessarily, I mean, you can definitely do adjustments, but 0-day is hard, to do an adjustment to like a trade like that, especially as the decay is happening so fast. What do you think of the idea of like you get out rather than a stop loss, maybe making this profit target bigger? Let's go back and run that. So we're back to just kind of the base test.
Troy,
But
could you also, instead of starting at 9:32 Eastern, can you start it an hour and a half into the day?
yeah,
Once maybe the range has got a chance to develop a bit.
yeah. So that gets into a bigger loser. You're collecting less money, but again, this is because I'm letting it expire, right? So now you have a narrower kind of profit potential
Yeah.
just because that 25 delta is so close. That's
Oh,
the
I see.
only
Because it's
thought I.
still a 25. Yeah.
So what would you, if you did 11, what kind of deltas would you be looking at for that?
If I did 11, oh, you talking about 11 Eastern?
Yeah.
What deltas? Um, I mean, I might, start with, uh, let's go 10 delta each.
Okay. How
I mean,
wide?
I would try different things. Um, Again, if you're, how wide do you want to talk to the beginner, intermediate, or advanced? If
Your
I'm
call. Do you,
beginner 5 wide, intermediate 10 to 15, advanced 20 to 25 wide.
let's do intermediate. Play nicely with everybody today. So again, you're winning most of the time, but those few times that you're getting stopped out, like obviously last Thursday. Well, this is the other part, Dan, that's interesting. And it kind of speaks to the VIX environment. Like by 11, because you're doing those 10 wide, 10 deltas, the premium that you're collecting, you're only collecting about a buck
Sure.
on a larger, kind of margin. Well, the margins cut down a little bit because you're closer in. Um,
What's the when do you get out of this trade? What's the max loss?
I'm letting it expire. So what would you put? What would
Oh,
you
I
put
would
for?
I would yeah, I definitely wouldn't let. I mean, I
Yeah,
would
that's right.
try 10% profit target, and we can try them both at one at 15% max loss and one at 20.
Okay.
So you're looking at, you know, let's say you bring a buck. Are you doing 10 wide or what are you doing?
Yeah, 10 wide.
So
So 10
10 wide,
delta, 10
yeah,
wide.
you're 10 wide, you're looking 10%. So if you do $1,000 margin and the credit is a buck, so your total risk is 900 bucks. And so you're looking to make 10% of that, which is most of your credit, right?
Yeah.
10%, because you don't have much more than, it's not like with a 25 delta, you can get 20% potentially. So I would look at
Right.
making 10% max loss, try it max loss of 15 and max loss of 20.
Max loss of 15. Yeah. And then
Try it at
20.
max loss of 15% and then
Yep.
compare it to max loss of 20%. Because anytime you got, didn't it see like an 80% win rate? It's just tweaking because it's a higher probability. Now you got to
Yeah.
deal with the losses.
Yeah. Yeah. I mean, this is the thing that it's kind of speaking to the thing I wanted to. It's playing out perfectly, Dan, because I'm not a good 0-day iron condor guy. And so even the base test, it's hard for me to figure out
Yeah.
where you're going on it.
Yeah. Is this 15, Troy? 15%?
This is 20%. So 10% profit, 20% loss.
Okay. And that says the win rate is
63.
63.
And
So you
what's
don't make
interesting,
it.
you're only in the trade about 20 minutes because, you're getting movement pretty.
Wait, is that calculating 10% off the risk or 10% off the credit? That seems low, 21 minutes.
Well, it's off the stop loss of the credit. So if you've got a 70-cent credit,
Oh, see, I usually do, if I say I'm trying to make 10%, it's 10% on the risk capital. So if I do a 0-day iron condor 10 wide and I bring in a buck, 10% would be, I'm looking for 90 bucks.
Yeah. So let's do this then, just to try to synthesize that. Let's go up to 15% profit target.
Okay, run it. I see what so you do something off the credit.
Yeah. Let me do, and I might just, while we're doing it, go 20.
Yeah, probably 20 if you want to get.
Yeah. Someone's suggesting a 50% profit target, 150% stop loss. So let's.
Okay, yeah. I mean,
This is what I could do all day. This is kind of, if we ever have a conference, this is all I want to do all day long with everybody. So that is a little bit bad. I mean, you're winning 78% of the time. One of the things you'll notice is like your average winner is just a lot smaller than your loser, right? So it's just not going to go. But this is the thing that's interesting to me. We're not limited by this. So like we could keep going down condors, but the thing I'm interested from your standpoint, is there any other thing where you could maybe calendarize this at all, or get some sort of thing going where it's an income trade, but maybe instead of 0-day, we're doing like a 0-1 or a 1-2, still short term, but anything that, building.
Oh, you mean like
there.
like what would be short term in your community?
Well, for short term for us, short term in our community would be like 5 to 10 minutes. But in normal options land, I think anywhere from 0 to 3 days, I would consider that short term.
Okay, yeah. I mean, I like the 0, and I'd like to play with this a little more because again, we're used to doing profit target and max loss off your risk in the trade and not the credit. So that's might be a little bit of tweaking, but I mean, I like, I've done quite a few 0-day. I don't think anywhere near as many as a lot of your active 0-day. But what I have found is the highest win rate by far, and the best trade that I'm comfortable with. I mean, I tell students in our community, I say, if you're going to trade 0-day stuff, you got to develop calluses on your hands, right?
Yeah.
You just have to do it. I mean, there's no way. You almost have to say, look, I'm taking X amount of capital, and I am going to trade the next 20 weeks doing this strategy. I mean, you just have to do that. I mean, I do it, period, with the other stuff. But what I found the best thing is this on putting on Mondays, we'll call it a 3 or 4 day um, double strategy, right?
Okay.
If VIX is low, a double calendar, maybe 40, 50 points up. But if you want to take volatility out of the game, then you would do a calendar on the downside, butterfly on the upside. Those have been, very high win rate. And
Well, this is one of the things I wanted to show you. I don't know if you can see this, but this is another idea that I had. And this one looks a little more complicated, but you'll understand it. This is it's an end of day trade. So at 354, you know, it's a randomized number, but you basically sell a 1 day put that's 100 points away, and you buy a 2 day put at the same price, so a calendar. So it's basically 100 points down put calendar.
so 1 day, how far out of the money?
100 points. So you just look at wherever 100 points is
Yeah.
1 day, and you're selling that, and you're probably not getting anything for it in this market. But and then a 2 day of the same strike. So you've got a put calendar there, but it's a one day, 2 day put calendar.
Okay, so the two, are you selling or buying the 2 day thing?
You're buying the 2 day.
So you're buying you're buying the 2 day what strike?
Same strike. So basically whatever the 100 at the end of the day, whatever the 100 points below strike is at the put, you're going to sell that, and then you're going to buy the following day, so 2 days, the same put strike for the
Just
so
one of those. Right.
Yeah, just one of those, and you've made it a put calendar. Then on the upside, it's almost the combo trade you've been talking about, but it's just a very short term one. But then the on top of that, you're going to buy a call butterfly. So you're going to buy a 25 delta 1 day call butterfly.
Is the 25 delta your short?
Nope, the 25 delta is your long.
Okay,
And
you're going to buy so you're buying a 25 delta call.
yeah, and then go out 25 points on top of that, sell two of those wherever that is, 25 points beyond that. And then you're going to buy 25 points on top of that. So it's a 25 well, technically I guess 50 wide call butterfly. And it's interesting. This one's interesting to me because you kind of have, let me show you real quick if it's okay. Let me stop screen sharing for 1 second, and I'm going to show you a graph of what it would look like at expiration. Now, I put it on this morning. It's not the same trade as what I'm showing, but the graph should look similar. So
you put it on in the morning, like if you were going to do it today, you'd put it on in the morning.
No, what you do is you'd actually put it on at the end of the day today.
Okay.
And you'd take it off tomorrow.
Oh, I got you. Yeah. Okay.
So, and then as you can see the expiration, how this would work. So you kind of have a tent that I think one of our, a guy named Wizzy in our community says the tent of despair. At expiration, you're definitely in the middle, in the range bound. If we do nothing, it's going to lose if you hold it to expiration. But it gives you a little bit of room to the upside and a little bit of room to the downside for a short term trade.
Yeah, I like something like, mine is very close, but it's more, this to me would be more set up if I'm looking for a move, right? Because you have wide, if you in this example, if you're, where you're putting it on, you can handle quite a move, right?
Yeah.
Much more than the expected move. Agree?
Yeah.
So yeah, I think, maybe before an event, right?
Yeah.
Like before a Fed type thing or whatever, because this can handle 50 up and down. Agree?
Right.
Right. So this would be more for a move. You call the middle the despair. I used to call it like the Sea of Death or the Bermuda Triangle. But that doesn't bother me so much. That's an expiration on day on day 1, right? On the
Right.
one day. So you've got,
Yeah, you're getting out the next day.
yeah, so that doesn't bother me. But I might, if I'm doing this on a Monday and it expires Friday, I might, generally what I would do is go 50. One example of it would be, there's many examples, but maybe go 50 to 60 points down and do a 4 wide put calendar. Right. So
Hold on.
put
I'm
it
gonna.
on. So let's say you put it on Monday at lunch. I mean, I like what you're doing because but it would be more. You're getting more room on a move, right?
So let's just play it out a little bit because I love doing this. So
Yeah.
what would you do? What time of day
So let's
first
say
off?
the downs. If you put it on Monday, and I take it off. So Friday. So here's the calendar. I put it on Monday. I'm going to sell the Friday and buy the Monday calendar at least 50 down.
Okay.
So it's a
Give me.
3 wide calendar, at least 50 down, right? It could be 60 down, depending on the VIX, but we could start there.
So you're gonna sell the put 50 down. You said.
Yeah, put calendar 50 down, 3 wide.
Okay. When you say 3 wide, so almost like a diagonal.
No, three diagonal would be different strikes. This would be just your long is 3 days further out than your short.
Oh, I'm sorry. Yeah, 3 wide. You mean the day? I got you. Yeah.
Yeah.
So that's going to be a 4-7. Okay.
Okay, that's right. Yeah.
And just I always like to run it just to make sure I've got everything so far corrected on that. So okay, and then on top of that, you're gonna do a butterfly to the upside.
I would do a butterfly. Let's put your short strike 50 up. And
Okay.
sometimes these could go 60 or 70 up, but I'll look at the graph, a few other things with it, but let's just 50 up. And usually what I'll do is the calendar and the flyer near the same price. So if the calendar's 350, the butterfly, I'll set the width at 4, but I'm guessing here somewhere, I don't know if you could tell here, but like 25 wide.
Okay. And is it 4 days? Is it the Friday expiration?
Yes, Friday expiration. So the calendar would be Friday, Monday. The butterfly would be Friday.
Okay. And then you're selling it. How many past that? So you're buying the 50 up. Where would the shorts be
No,
on
I'm
top of it?
I'm selling 50
Oh,
or 60
I
up,
see.
and I'm buying the wings 25 away. So
I got you.
in both cases, the calendar and the fly, my shorts are going to be 50, 60 points away from the current SPX price when you put it on.
Gotcha. All right, give me 1 second. Let me.
And this would be more trying to take volatility risk out of it, more neutral, so you're only dealing with your one enemy would be price.
Right.
I mean, it's a big enemy, but you don't know about.
Oh, yeah, hold on. There we go. So
Now,
doing it on Monday. So as far as like exiting and things like that, let me run one just for the sake so we can get some data on it. And I imagine you don't let it necessarily just sit to expiration.
no, usually my experience with this trade has been, I'd say 80 to 85% of the time I put it on Monday, we're out by Wednesday.
Okay.
So, and looking for 8 to 10%. Now we also have some risk management stuff on it, but that might be tougher to put into the thing. What the adjustments, because when you get to 4 days, I would do an adjustment if I needed. I would consider an adjustment, even though I'd say most of the time, Troy, I don't. But
So you get, I'm just looking through real quick just to make sure I've got it right. So you're going to get out by Wednesday end of day or Wednesday first thing in the morning, or does it matter?
no, just Wednesday.
Okay, perfect. And
End of
then
day, I would say.
End of day. Okay. Let me just do that real quick. And then you said take 8 to 10% profit.
Yeah,
Okay.
but I would say 85% of the time out by Wednesday. Not always, but I mean, quite a bit.
Sure. Um, and then I'm going to say 10% profit here.
Because you're getting a what, when you think about it, if you're only, I'm not interested in the expected move till expiration. You're interested in the expected move of how long you're going to be in the trade. So if it's a
Right.
4 day trade, I'm going to be in 2 days. When you look how wide these things are, they can handle a 2 day expected move pretty
And
valiantly.
that's a great trade, Dan.
I
I love
like
it.
it.
I love it. That's
How do you determine, or what are you looking
well,
at?
so basically the thing I always look at, Dan, is that what this little thing here called MAR ratio.
Yeah.
And so that MAR ratio is basically your CAGR divided by your drawdown. So basically it takes into account your drawdown because
Okay.
you can have credit selling things that have huge CAGRs, but you also have an 85% drawdown. And so the MAR ratio is not good. So I always tell people like a two MAR over a 10-year period is a great trade,
Okay.
you know? And so that and what this is, I mean, this is basically just I mean, here's the thing. This is the reason I love it. You really aren't scared in this trade. I mean, again, it's a short-term trade, by
No.
historic standpoints. There's not you don't have a lot of fear in this, right? I
No.
mean, you can
No.
handle a lot of stuff.
Oh yeah, for in for 2 days. Now you might, just like I think anybody who does 0 days, you might look at something like this, depending on the news or something.
Hmm.
Once in a while, I may give credence to, if I'm up 6%, and I think there's a significant news event the next day that can move the market, I may pull it and maybe come
Right.
back in. But this you could do Monday with Friday expiration, but I also will do it quite a bit on. I'll do it up till Tuesday. So Tuesday on Friday expiration. So really, this would be a 3 or 4 day trade, right?
I see.
So you could do it. I mean, theoretically, you could do a couple of these a week, right?
Yeah.
And it just doesn't. I mean, to me, I think you get a much higher win rate than a 0 day, and I think you could do this. I think for 0 day traders, you could diversify. This would be diversification to me. That this would be for most of your 0 day traders. This would be like more room than they've ever had in their life, right?
Yeah. Yeah.
I mean, compared to a 0 day, 0 day, you're like on the edge a bit, right? Unless the vols are real high. This gives you are, I mean, the negative of this is you are going overnight, but you've got a lot of room, right?
Yeah.
And you could
Right.
tweak, I mean, you could tweak the wings, you can do different things. And we'll do this type of a trade, Troy, from like 3, 4 days on the low end up until maybe 8 or 9 days.
Yeah.
So if we get to maybe Wednesday or Thursday, like of this week today, I'd be looking at next Friday expiration.
I see.
But then I'd
Yeah.
structure it a little bit differently. I would go 4 wide on the calendar and maybe a little bit on the butterfly wider. But um,
All
these are,
those things, I mean, all those things you're talking about are the kind of things that, like, again, not just to sit here and praise Dan, but like for a lot of newer traders who come in and I think personally speaking, we have a great tool and you could test things like this. But what you're speaking to is a lot of market knowledge that I think comes through the years of just trading these things. And I mean, all everybody can sit in a Discord all day and talk about just trade the plan. But what's funny about that is I also know that the plan always is changing. So I
but
think
that's,
that,
you said
yeah, go ahead.
something, and I got a lot of respect. I tell you, when you say, to me, when you talk about 0 day traders, I've got a ton of respect for 0 day traders. Let me tell you why. Historically, when I would train somebody with mentoring, I'd almost want them to get their foot in the fire a little bit. I'm like, you know, you would think philosophy like, okay, you got someone who's inexperienced, get them in a 50-day trade so they can't get in trouble. The problem with a 50-day trade, you're in it half a millennium, right?
Right.
How is that really helping? So I always would put newer traders in like 1 week option, 5-day, because I thought you're getting more practice. People like,
Yeah.
well, you're going to hurt their confidence or their self-esteem. And I'd say baloney foot. I don't care about theirs. It would, as long as you keep the size small, right? But
Right.
if you can get more trades, they're going to get better risk management skills. And I think, when you've got guys in your community trading every day, 2-3 times a day, they're going to be better traders because
Yeah.
their risk management is going to get sharp, right? Because they're
Yeah.
So I don't I don't look
Well,
at now. Don't get me wrong. I think to me the gambling part when you say 0-day, the gambling part is just. I think it's almost a wrong word to use for 0-day, right? It's like saying, and it might be a case with some Robinhood people, but it's, to me, if you're a 0-day trader and you have good, solid risk management, all the respect in the world. If you're a 0-day trader and you don't have solid risk management, you just need to get, that's just the difference to me between, people considered gamblers just because maybe they don't have, a good 0-day trader has good risk management, right? They can't let the thing go too far against you. I mean, it's pretty basic, isn't it? That
right.
when you think in 0-day, again, it's not the strategy to me as much as it is, you can't lose much more than you make, right? Or
Well, that's, yeah.
And you say, well, Dan, that sounds very easy, but that's it with all trading, right? It really is discipline. I think you need to play consistently and at the same size, but when you're getting out of the trade, you got to keep your losers under control. And that's to me not as much knowledge. It's someone who's disciplined, right?
Well, that 100%. And even looking at it, like running it back a year, it doesn't do as well as year to date. But this is the joy of it is you probably weren't trading this exact setup a year ago. Like you were looking at the market and doing different strategies based on the market.
Well, yeah, and that's a lot of it. I think if you ask any good 0-day trader, agree? And I remember you said this about Tammy, that
Tammy Chambliss,
yeah, that sometimes she wouldn't play, right?
Oh, yeah.
And that's the key. You ask any good 0-day trader in your community who's trading all the time, and that the learning and the progression is going to come. Sometimes they'll stay out. Sometimes they'll tweak it. So it's not going to fit. I know what people want. They're going to fit. Okay, get me a back testing exactly as is, right?
Yeah, yeah.
But it's never going to, back testing is a tremendous asset, right, for learning. But it's hard to sometimes get it to totally simulate somebody trading it, right? Because
Sure.
No, Tammy or anybody else in your communities, they're not sticking exactly, right, to, because there's other things. And like on that trade, the double or the combo strategy, there's a lot more to it than that, right? In terms of maybe when we'd adjust, when we wouldn't play, avoiding bullets, and sometimes, when I might take it off at zero profit or loss because I'm smelling a rat, or if it's a day before a big, what I perceive as a news event, why risk it, right?
That's the thing is
because here's the thing, Troy, you're looking for potential danger as a range bound trader. Like, for example, a couple things. One, if you look at, last Thursday we had a 100-point move from high to low, right? And if you look at that and you say, well, how many days in the last year and a half, right, since January of 2023, have we had a 100-point range? It's 6. That's it, right?
Yeah.
For perspective.
Right.
The other thing is to look at it and say, now what was I thinking? Um, the other thing is if you look at 2023 and you say, how many gaps? So most of these news events are gap related, right? If you look at like the, non-farm payroll or CPI, those all come in the morning so that you could have that gap in the morning, right?
Yeah.
Well, how many in 2023? I think the stats are, you say how many, like, I think the biggest gaps were like 34, 40 points
Yeah.
gaps. The biggest gaps of 2023, I think, let's say there were 13 or 14 of 40 points or more, something like that. That's pretty close. But the point is, 65 to 70% of them were related to a news event, right?
Yeah.
That's low-hanging fruit to me. So with a little diligence, and I'm not saying, 0 day is a bit different because, to me, it seems like with 0 day options, and I'd like to get the feedback from you guys and some of the folk in your crowd, 1 or 2 days before a big event are great for 0 day.
Oh,
Because
certainly.
it's like there's nothing going on, and this big storm is coming, which usually doesn't materialize. But a lot of times your best 0 day trades are news weeks, excluding maybe the event, right?
Right.
And I'm sure
Right.
I would like to know in your community. I mean, I'm sure it's got to be mixed. I'm sure there's some 0 day folk who will say, I just trade all the time through events. But then others will have some criteria when they won't trade.
Yeah.
And
no, I think that's exactly right. I mean, Tammy Chambliss, who, in my opinion, like, is one of the stalwarts of 0 day and the best way possible, is that she has a system. She is meticulous about researching the system. She relies on the data. She trades the plan. And then she's also a human being who says things like, I didn't trade today. And sometimes it's, I ran an errand, I was on vacation. Or sometimes it's like, didn't like what I saw, and I think there's always a part to play in that. And you're always adjusting as you go. I want to look three things. One, spook. We asked, when do the 5 day a week, the SPX 5 day a week start? It's May 16th, 2022. So thank you, Spooky.
Thank you.
Two, feel free, if you want to speak to 0 day or your experiences, put it in the chat. I'm going to show them one more, and then I don't want to keep Dan all day long because we're an hour from market close.
But I think Troy, wouldn't you say? I mean, what the little bit you've told me, and I've talked to Tammy, and actually, you remind me. What's today? Thursday. I am speaking. Tammy's head of a group in Texas.
Yeah.
Which I'm kind enough to speaking on Saturday. But when you look at like that 0 day iron condors, here's some general thoughts. I mean, the bit that I know about how Tammy trades it, she starts with maybe a 10 delta or something like that.
Something like that, yeah.
Yeah, but the point is, it makes total sense. I mean, that's how I do it, 0 day, but she takes the emotion out of it. You're just, and I think scaling, I would call it scaling, right? Maybe I'd put, time capsule and put them on, every other hour, whatever it be. But the bottom line is, these are 10 delta, so you got a little bit of price diversification because you're putting them on. You're not putting them all on at 9:30, right?
Right.
Price diversification, but you automate it, which I think is you'd be a better trader because too much emotion could come in 0 day, and I'd rather say, okay, if it's a 10 delta, when that 10 delta hits, you can either do it by delta when that delta hits a certain point, or you could say, hey, when I'm down X amount, close the bad side, right?
Right.
Or when the short option gets, and you've got this automated system, but what makes it work is it's 10 delta, right?
Right.
It's 10 delta. You're diversifying your price risk. So you don't, in a way, you don't have to worry about technicals as much, right? Because you say, am I doing it at the right time? Am I doing it in the middle of the, on a day where there's a 30-point range or whatever? the other thing I was thinking of, have you ever done much testing on saying, okay, we're going to do iron condors or butterflies by, I just thought of this now. If by, let's say, 2 hours into the trading day or 2.5, if the range between the high and low in SPX is 35 or under versus 40 or over, in other words, I'm going to play if it's 35 or less, right?
There's a couple different things you can do. One of the things I'll show you is like the idea of like an opening range breakout.
Oh,
So
okay.
this is a trade where like anytime after 10:45, you
10:45 Eastern, so that's about an
yeah,
hour
Eastern,
15.
yeah.
All right.
So you take the first hour's range, and anytime after 10:45, if we break out of the first hour's range, put a debit butterfly on, just a at the money almost butterfly that's
Okay.
positive delta, and things like that. That are interesting, and
That's
they've
more of
worked.
a directional play, right?
Yep, that's right. It's worked really well this year. One of the things I wanted to show you real quick before we go is I just
It's like
shared
this
it.
is an addicting toy.
Oh,
Um,
it's
this
listen,
I could
it's
go.
pain.
I mean,
Yeah,
this would be like, people talk about, what consumes you at night, and you watch old movies or whatever. I could see this causing major problems with me. Just because you could just, I mean, because it's the endless thing, right? You just you want the perfect trade. Not that you'll ever get the perfect trade, but well, go
yeah.
ahead, Troy.
No, the last one I was going to show you. This is year to date, but this is an interesting idea. I just wanted to get your theory on it. So, or perhaps why it's worked so well. So, what this is basically you're selling the 50 delta straddle first thing in the morning, only on days where we've had like any move down. So if we're down 1 point or we're down 100 points, it don't matter. If we open down, you put it on and you sell the 50 delta straddle 0 day, and you buy a one day strangle 25 wide. So it's almost like a calendarized iron fly is the way I look at it.
Yeah, 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 yeah.
And this is actually what's interesting is this is actually set it and forget it. So
So you get out
why
at
do
the
you?
end of the day.
Yeah, you just let it. You get out right at the close of the day.
Wow.
What's interesting? Why do you think that works in the year to date market so far? No promises that it works tomorrow, but why do you think selling that at the money and then calendarizing it? Do you have any thoughts about that?
Well,
Because
you're
this
getting
is intriguing.
more. Well, you're getting more. It's like espresso. You're getting more. You're getting more premium quicker because you don't have your longs are less of a deterrent to your shorts, right?
Right,
Because they're the next day, right? So
right,
those are really, it's going to take a lot to really hurt that trade, right? Because your longs are the next day, and you have like a frothing theta decay on those at the monies, because you don't have your typical iron butterfly. You put your longs 30 points away or something, right?
right.
And here's what are the longs? How many points away from the
It's
shorts?
25, 25 each direction. So
Yeah.
um, it's kind of like, I mean, I call it a calendarized iron fly, but it's almost like kind of that, and or like a double diagonal
Let me
almost
ask you real quick. What if you did this exact thing? Just one. What if you said you're putting it on at what time?
in the morning, first at 9:32.
What if you only kept it 2 hours? What would the
Let me see.
numbers look like?
Let me let me do this too. I'm gonna go back a year. I'm gonna run it a year. It'll be obviously not as good.
Well, what
Um,
were you running at? How long?
just year to date.
Okay.
That's perfect. So that's why the beauty of this. Uh, so if you get out,
Well, yeah, year
um,
to date, you really haven't had any. It's
right,
been more the market's been up 10%, right?
right, um, you're gonna get out 11:30. Yeah. not. I mean, obviously, it improves it. Let me go back to the year-to-date one.
What did you do to the
So
max loss?
I didn't do max loss. I just said you get out after you're going to get
Oh yeah,
out
just get
after
out at 2 hours.
2 hours. You see, my theory with this one is, I don't know if I'd ever trade any of this part in real life because you have no exit, you have no risk management. So even adding that, although it makes the trade less good, it still in my mind makes the trade more realistic. If that makes sense, because you're not going to hold some crazy thing where it drops 100 points. You know,
Well, just I can tell you, if anybody's ever had a 30, let's say a 25 wide butterfly on a 0 day after lunchtime in a lower vol environment and SPX moves 10 points, you could be down a couple $100 before you could sneeze, right?
right,
And I mean, those things move because, when you're looking at a 25, 30 wide butterfly, those can be what, 12, $1,300?
yeah,
I mean, those are big dogs.
oh yeah,
Those can bite. And that's why, I think for folk, at least with like 5 wide iron condors, you can come in and a little less, butterflies have quite a bite to them, depending on your width of the butterfly. So I think on butterflies, if I'm somebody starting, I think you get more leverage and stuff. I'd probably go maybe look in the 15 wide or something like that. 15, come narrower. But yeah, it's
that's it. So interesting, Dan. I could do it all day.
yeah.
This is what I love doing.
No, but I
But
think you know what it is, Troy. I think it's like you almost have to encourage each other. I'll tell students, I'll say, look, at whatever the trade is, whether it be 0 day, whether it be Troy, can you hear me? I'm not seeing.
yeah. You're good.
Whether you do 0 day, and I think there should be diversification. I think you have a plan, right? And like a plan could be, okay, I'm going to do a 0 day every day. Here's the capital, okay. And then maybe I have some, and I'm also putting on some Monday or Tuesday, maybe some 3 or 4 day stuff. And then what we do, we might put on some 15 to 30 day stuff. So you kind of have some diversification. You're diversifying your risk. You're diversifying your duration. And, but I think the 0 day keeps you a little busier during the day, right? I mean,
Yeah, for sure.
doing 15 to 30 day stuff or even 4 day stuff could be like watching paint dry a lot of times.
Yeah.
But I think I think the one thing I would leave folk with is, you got to have that craftsman mentality that, hey, if I'm going to do, whatever the strategy is, whether it be Tammy's, that type of an iron condor, of which that's kind of what, how I've like to do 0 day iron condors, that kind of scaling them.
Yeah.
But the key is this: if you're not going to commit to do it, take X amount of capital, whatever, a couple grand, 5, whatever, and I'm going to do 20 weeks in a row, 25. Don't do it, right? If you're not going to commit to do it, don't do it, right? I mean, you have to make that, because most people, if they start losing, if they lose 2 or 3 in a row, it's different, right? And I think the thing that we forget, the more you trade, the more weeks you have under your belt, you're going to get much better, right? You're going to learn. So I think it's, if you approach it as a craft, right? In our community, people who, it's like, if I make 50 fettuccine Alfredos versus 10, I should get better, right? If you're, I mean, obviously if someone's losing 3, 4 trades in a row, they should take it into the garage and have somebody look at it and make sure they're not doing anything crazy. But I think it really is a craft. I mean, in our community, the best butterfly traders have done the most. The best calendar traders have done the most. The best 0 day folk in our community have done the most. And the more you do, you become better at it, right?
Yeah.
Because you see what doesn't work, right?
Yeah.
Or you just tweak things. And so that's why, we have quite a few that do like 0-day butterflies. And so you exchange, okay, I did this with, you did that with, and the journey that you get into these things. But anyways, thanks,
No,
Troy, for.
Dan, I appreciate you. And before I'd be remiss if not to say it. You are doing something crazy over there that I wanted to speak to just real quick because it's I get tired. I'm tired just from I sleep and then I wake up tired. You, on the other hand, are I'm gonna look at it real quick just to go to it. You, on the other hand, are starting next week teaching 4 classes, which is
Oh,
insane to me. Um,
yeah.
so, but for those who don't know, Sheridan Risk Management, can you speak to it real quick? Just what are you doing over there? What's going on? How can people find you and all that good
Yeah,
stuff?
we're changing websites next week. We'll be at SheridanRiskManagement.com.
Yep.
And if you go there, and we have basically we'll be having, each day we'll kind of have a subscription price, but like each day we'll have a Monday through Thursday, we'll have 9:50 Eastern for an hour allotted where we'll be putting on trades, looking at live trading ideas, looking at the news for the week, making our trading plan. But we'll also have folks with live trades on that maybe are looking for an adjustment, or we'll also always leave some time that people can show their trades and we can look at the trades. That's a big help, looking at trades that maybe are near an adjustment or something. So that will be the early morning slot. And then every day at 2 Eastern, we'll have a live class. So sometimes the classes will meet, twice a week or whatever. But next week, Mondays will be the combo trade that I talked about. That will go for 4 weeks. We'll have live
Yeah.
trades each one, but we'll really delve into all the intricacies of that combo type trade, and that's a shorter term trade. Tuesdays will be like we've run this like 3K 10% class. Um, that would be more the way we normally trade at Sheridan Mentoring, and that will be just, we'll trade what the market gives us. It could be
Yeah.
calendars, butterflies, different types of trades, but that will be your class on Tuesdays, and that'll go at least 4 weeks, and we'll be putting on live trades, but it will show you how we pick trades based on what the market will give us. Wednesday, for the next 4 weeks, will be on Managed by the Greeks. That's how we used to trade, how we'd manage trades in the pit, whether you have 1 trade or 4 trades, and it just trying to give you a practical way to use the Greeks in your trading. And again, to me, you have to, right? I mean, I'm a visual trader. I look at the graphs, but the Greeks are like the instrument panel in an airplane, right? You
Yeah.
can't tell the pilot, well, you're such a good pilot, trade without the instrument panel. Well, I don't know, right? And so I think the Greeks, so the goal is to make the Greeks more accessible to everybody, that it's not this mysterious concept, and more important, practical Greeks. When you look at a calendar, people look at, well, long vega, right? Market goes down, volatility helps you in a calendar. Many times it doesn't. So there's theoretical Greeks, and then there's how things really move. And then Thursday would be the last class. That'll be on short-term iron condors, and will be I think the legendary Troy McNeil will be helping me in that one, right?
Yeah. I'm looking forward to it.
So we're doing, and then we'll have outside speakers into everything to enhance the experience of the student. But the idea is there's a lot, probably more live content than most. But I think that's it's this community and a lot of interaction. So there's a lot of different people interacting in the different sessions. So you're all working to build a better chair, whether it be a 0-day trade, a better butterfly, a better calendar. So I think there's and I think we'll have a discount coming into this as we launch the new website, and you could check our site on that. So that'll all be starting next week. So basically, you'll have minimum 2 to 2.5 hours of live content a day,
Yeah.
and all those is
Just
live trade. So and everything's recorded.
it's exhausted to think about, but you do it, and it's fun to me to do this stuff, and the fact that you're doing it as much as you are is impressive to me.
Well, it's
Uh,
you know what, Troy. It's what makes it best is it's human interaction, right?
right.
I mean, I like all the other ways to communicate, but here people are coming out and you're talking. It's different. There's energy. You know, talking with you, the time flies and things go here. But I think as you challenge each other when you're a lot of live, and I think you can get that instant feedback. Well, why don't you do it this way? Like you had some people today, or like Troy, why don't
Yeah.
you change it this way or do this way? So,
Yeah.
but it's just folk working on the craft together. That's it.
No, I love it, and one of the I mean, again, we work with a lot of people, Option Omega, a lot of good affiliates, and a lot of people who are just great options educators, and that's why we did the Option Omega Academy is to have people like you who are good educators. I'll say this from people, people who are in this all day trading. One of the things that's unique about Dan is uh well he's one of these guys that, like, I took a class from Dan in 2018. I still have a Google Docs with all my Sheridan notes that I made from taking classes from Dan. And one day while I was at work, previous world, I get a call and it's freaking Dan Sheridan just wanting to check in how I'm doing with everything. That's very, very unique. But B, that class in the morning he's talking about, I know a lot of y'all are subscribed to like morning, you might have like a morning thing where people, or maybe you get on YouTube and you have people that like talk about market news or what's going to happen. And really that's it just all that is a lot of times is like FOMCs in 9 days, FOMCs in 8 days, CPIs in 7 days. Uh, Dan, what Dan does in the morning is crazy because you can get on and Dan will say, are there any trades you want to look through that you have on? And he will just work with you on the class. And, if you're willing to show everybody what you're doing, you guys work on it together, which I just think is a very unique way to do it. And really the way, like you're talking about, people learn in the long term. So shout
Well,
out to you for all you do. And with
thank you.
anything Sheridan Risk Management, Dan Sheridan's the man, and we will be happy. I will be doing that Thursday class with him, the short-term iron condors, where we're going to just do probably about 10 hours of what we did today. And we're just going to go through the data and figure out the best condors to go. So I think it's going to be
Yeah.
really exciting. So anyway, thank you so much, Dan. And
Thanks.
if you guys
Thanks,
have,
Troy.
yeah,
Appreciate
if
it.
you guys, no, thank you. If you guys have any questions, feel free to reach out on the Discord or anything like that. Otherwise, have a great day and we will talk to you soon. Bye-bye.
Thanks.